Welcome to the Deep Dive. Today we're plunging into the mind of, well, arguably the most influential figure in global finance, Larry Fink, the CEO of BlackRock.
Yeah, it's hard to overstate his influence, really.
Exactly. I mean, for context, BlackRock isn't just a big player, it's the world's largest asset manager. They oversee, what, something like $11 trillion?
Over $11 trillion, yeah. It's a staggering amount.
So his annual letters, they aren't just, polite updates for investors. They're basically a state of the union for the global economy, society, politics, insights that genuinely move markets.
They really do shape minds. It's quite remarkable how one letter can carry such immense weight. But I suppose when you're steering that much capital, your perspective inevitably frames those high-level conversations and decisions globally.
That influence is precisely why this letter matters so much. So for our deep dive today, our mission is pretty clear. We're going to try and extract the most important nuggets of knowledge, the key insights from Fink's latest 2025 annual letter.
The one titled, Time to Rethink Retirement.
That's the one. We want to help you understand his core objectives, the complex economic climate he sees, and the big shifts he's highlighting for finance. And, crucially, for your own long-term financial security.
And it's quite a wide view he takes in this letter. We'll be getting into everything from, the return of protectionism, the scary state of national debt, all the way to the future of private markets, different ways to think about retirement planning, and even, surprisingly, Bitcoin's role in the economy.
It really covers a lot of ground. It's a comprehensive look at how BlackRock sees the world ahead and, I guess, how they're repositioning themselves within it.
Definitely.
Okay, let's start with the big picture. Fink's core message and the global context. We've set the stage leader of BlackRock, $11 trillion plus. This gives his letters real power. So what's the main thrust of this 2025 letter? What's his primary goal this year?
Well, the central theme seems to be what Fink actually calls the democratization of capital markets.
Democratization. Okay, what does he mean by that exactly?
It's not just about, say, wealth distribution in the usual sense. He's proposing a pretty radical shift in how people access wealth-generating assets. He talks about these twin economies.
Economies?
Yeah, where the ultra-rich keep benefiting from these exclusive private market investments, like private equity, infrastructure, that kind of thing, while the average person is effectively locked out.
Right.
His core point is that unless we broaden access to these high-growth areas, economic inequality is just going to get worse, leading to more social fragmentation. He frames it less as charity, more as an economic necessity for systemic stability.
Okay, so it's a stability argument, not just a fairness one. And he's making this point against a backdrop of some, well, pretty serious macroeconomic warnings. He doesn't exactly paint a rosy picture, does he?
No, he definitely doesn't shy away from it. He states very clearly that protectionism has returned with force.
And he connects that to...
He links it directly to this widespread feeling that capitalism has not worked for everyone, which he sees as fueling social division. You can see this playing out, for example, with the talk of more tariffs, maybe under a Trump administration in the U.S. What's interesting is that BlackRock, traditionally all about globalized capital, is openly acknowledging this major shift in economic thinking. It obviously impacts investment flows, market stability, everything.
And it gets even more alarming when he turns to the U.S. public debt. The numbers he throws out are, honestly, they're kind of mind-boggling.
They really are. Fink projects U.S. public debt interest payments could hit, get this, $952 billion in 2025.
Almost $1 trillion, just on interest.
Just interest. Potentially more than defense spending. And even more worrying, he warns that by 2030, mandatory spending, things like Social Security, Medicare, plus that debt service, could eat up all federal tax revenue.
All of it, leading to a permanent deficit.
That's the projection. I mean, connecting this back, it poses a huge challenge to long-term economic stability.
Yeah.
It could seriously affect the dollar's standing globally. It makes you ask, are we just kicking the can? Or is there a cliff edge approaching?
It's a very stark reality check. Okay, so with those warnings out there, Fink isn't just ringing alarm bells. He's also proposing a bold strategic shift, and a huge part of that is this democratizing private markets idea.
Right.
He argues that these essential future assets, data centers, ports, grids, fast-growing private companies, they're just out of reach for most retail investors right now. So how does BlackRock actually plan to unlock these markets? What's the strategy?
Well, a key part of the strategy seems to be their aggressive acquisition moves. They bought Global Infrastructure Partners, GIP, for $12.5 billion.
GIP, right. They own big infrastructure assets.
Huge ones. like 43 ports across 23 countries, airports, energy assets. The thinking from BlackRock seems to be if they control these tangible, real-world assets that generate steady cash flow, they can then package them up, maybe offer fractional ownership, and sell that to a much wider group of investors. It opens up a club that was previously very exclusive.
So it's about owning the assets, but then making them sort of digestible and investable for, say, your typical mutual fund, which then makes it accessible to you, the listener. What else?
Well, they also bought Preqin for $3.3 billion. Preqin is a data company that tracks something like 190,000 funds, 60,000 managers in the private space.
Okay, so that's about transparency.
Exactly. Private markets have always been notoriously opaque. The goal here is to bring, as Fink puts it, like a Zillow level of data and insight to private investing.
A Zillow for private markets.
Yeah.
Interesting analogy.
And then there's HPS Investment Partners. Another big acquisition, $12 billion. They focus on private credit.
Private credit, so lending directly to companies.
Yeah, loans made directly to companies that aren't publicly traded. It's a different risk-reward profile than traditional bonds, often higher yield, and it's a rapidly growing area.
Okay, so if we put these pieces together, the infrastructure from GIP, the data from Preqin, the private credit from HPS, how does this create this integrated platform for alternatives he seems to be aiming for? Is he really thinking private markets can become as accessible as public ones?
That seems to be the ultimate vision. Make private markets as transparent as buying a house on Zillow, where you can see comps, history, everything. He even suggests this could lead to indexing private markets like the S&P 500 for public stocks.
Indexing private markets, that would be revolutionary.
Absolutely. It could make these complex, normally illiquid assets far more accessible, more standardized for, the everyday investor. He's even pushing for a big shift in portfolios.
Right, the 60-40 split.
Yeah, moving away from the traditional 60% stocks, 40% bonds model towards maybe 50% stocks, 30% bonds, and a significant 20% in private assets.
Wow, 20% in private assets. That's a major shift for most people's retirement planning. And that ties directly into his bigger message about rethinking retirement, doesn't it? He's very blunt that current systems just aren't cutting it.
He is. And it raises that huge question. How do we ensure people have enough for the future, especially when the old systems seem inadequate? He floats some interesting ideas, like investment accounts for kids, activated at birth.
Like baby bonds?
Sort of, yeah. Inspired by ideas from Senators Cory Booker and Todd Young. The goal is to get long-term savings started from day one, let compounding work its magic over, 60, 70 years.
So getting people invested much, much earlier, it's a real push for policies that encourage financial planning from the get-go. But, what about people closer to retirement now, or those in their main earning years who didn't get that early start? Does the letter offer anything for them beyond just hoping they can access these new private market investments?
Well, that's precisely why he emphasizes the need for broader access to these alternatives. The argument is that traditional stocks and bonds might not generate the returns needed anymore, especially if we face lower growth or higher inflation. So while the kids' accounts are very long-term, the immediate push to democratize private markets is designed to open up new growth avenues for people saving now. The massive challenge, of course, is just the scale of it all. Implementing these kinds of systemic changes requires immense political will.
Right, that's always the hurdle. Okay, let's shift gears slightly. Let's talk about some evolving priorities for BlackRock, specifically ESG and digital assets. One of the most talked about things in this letter is the near total absence of the term ESG.
Yeah, environmental, social, and governance.
It's a huge departure from his letters just a few years ago, isn't it?
A massive departure. And it seems like a direct response to the intense criticism they've faced from really both sides of the political aisle.
How so?
Well, on one side, you had conservatives accusing BlackRock of pushing a green agenda, sometimes at the expense of financial returns for clients. Woke capitalism, they called it. But then on the other side, progressives were pointing out the perceived hypocrisy, BlackRock talking about climate risk while still holding massive investments in fossil fuels. We're talking like $260 billion total, with $91 billion just in Texas energy companies.
So caught in the middle.
Exactly. So the strategic move here seems to be pragmatic adaptation. Fink has basically said he's done using the ESG label. He's focusing instead on immediate client needs, on financial materiality.
But he's not abandoning the underlying investments, right? He clarified they still have, $138 billion in energy transition strategies.
Correct. It's a very nuanced repositioning. They're saying, look, we invest in energy transition because it's a massive investment opportunity and relevant to our clients' portfolios, not because it fits under a politically charged ESG label. It's about decoupling the investment case from the political debate.
Trying to thread that needle, it's a tricky balance.
Very tricky. It shows how much the political environment is shaping even corporate communication at this level.
Okay, and speaking of new frontiers, Bitcoin. Fink dives into digital assets, too. He calls Bitcoin digital gold.
Yeah, a potential hedge against inflation, which is quite an evolution from the skepticism we used to hear from mainstream finance leaders just a few years back.
Definitely. It shows how much digital assets have moved into the institutional mainstream.
And he even links it back to the U.S. debt problem. He warns, subtly, that if U.S. public debt keeps ballooning, investors might start preferring assets like Bitcoin over the dollar.
Potentially eroding the dollar's dominance.
That's the implication. It's a nod to Bitcoin's growing relevance, maybe even as a check on government fiscal policy.
And BlackRock isn't just talking the talk. Their Bitcoin ETF, iBeat,
Launched in January 2024.
has pulled in over $18 billion already. That's incredibly fast uptake for a new ETF product.
That success really backs up Fink's bigger claim.
Mm.
He says, and this is a direct quote, I think, the tokenization of every financial asset is the future.
Tokenization. Explain that a bit for our listeners.
So essentially it means representing real-world assets, stocks, bonds, real estate, maybe even art as digital tokens on a blockchain.
Okay, why do that?
The idea is it could make these assets much easier to trade, potentially 24/7, and crucially, easier to own fractionally. You could buy, say, $100 worth of a commercial building. Fink explicitly says BlackRock is already implementing this technology.
So this could be another way to achieve that democratization he's talking about by making ownership more accessible.
Potentially, yes. It points towards a fundamental shift in how assets might be owned, traded, and managed in the future.
Okay, so pulling this all together, Fink's letter maps out a clear strategic adaptation for BlackRock. They're navigating a really complex, shifting world. But what are the major challenges they face in executing this vision? It can't be smooth sailing.
Oh, definitely not. The challenges are pretty significant. First, there's the political resistance we touched on. The criticism from both left and right about BlackRock's sheer size and influence, plus the ESG blowback, could really limit their ability to sway public policy, especially globally.
Right, if they want governments to help rethink retirement, political headwinds matter.
Absolutely. Then there's that tightrope walk on sustainability. Ditching the ESG label might appease some critics, but it could alienate progressive investors or employees, and their ongoing fossil fuel investments will keep drawing fire from environmental groups. It's hard to please everyone.
A very difficult balancing act.
Then you have the wider economic risks. If that public debt situation worsens, or if protectionism really ramps up with tariffs, that could shake investor confidence and complicate their plans for democratizing markets.
And what about competition? They're moving deeper into alternative assets.
Which is already a very crowded space. They're up against highly specialized, established players like Blackstone, Apollo, KKR. BlackRock is huge, but in some of these niche areas, they're still playing catch-up.
Okay. And finally, this big bet on tokenization.
Huge potential, but also huge hurdles. Mass adoption needs major technological advances, sure, but even more critically, it needs regulatory clarity.
Right. Different countries, different rules.
Exactly. You need a consistent global framework for how these digital tokens are treated legally, how they're taxed, how they interact across different systems. Without that sort of interoperability and clear regulation, tokenization might remain more experimental than truly mainstream for a while.
That makes sense. Okay, so to wrap this up, Larry Fink's 2025 letter feels like a definite pivot. He's really hammering the themes of market democratization, urging a fundamental rethink of retirement planning.
And he's doing all this while trying to navigate these incredibly strong political and economic cross-currents.
Yeah. And this deep dive into his thinking, it's really crucial for you, the listener, understanding these big shifts he's outlining, from protectionism and debt worries to the rise of digital assets and these new ideas about your retirement saving. It's essential stuff for navigating your own financial future.
It really helps make sense of the evolving global economy and where things might be heading.
It certainly does. It leaves us with a lot to think about. Which brings us to our final thought. Given Fink's really ambitious vision for, democratizing private markets and totally rethinking retirement, and considering all the significant global challenges he lays out, what responsibility do financial institutions like BlackRock, governments, and even us as individuals truly have in securing economic well-being for future generations, especially in a world that feels, increasingly fragmented?
That's a deep question to ponder. Where does the responsibility really lie, and how can it be shared effectively?
Something for you all to consider. Thanks for joining us on the deep dive.